Live on stream. All right. All right, we're looking good. Hello, everybody. Today is Friday, October 18th, 2024. Less than 20 days to the election of remember the 5th of November. I am joined here by Astronaut Toad, and we are releasing a new indicator for the community. So if you want access to that, we will make an announcement about it with a link, and you'll have to claim the indicator. The indicator is called the Money or Market Squisher version 1.3. Astronaut Toad, why don't you go ahead and take it from here, my dude?
Yeah. Oh, hey, I can't share my screen. I think yours is still being shared.
Oh, no. I mean, I'm going to be showing my screen.
Okay.
And then you're going to guide me through this process on this brand new indicator of ours.
So, yeah, this is a indicator with sort of a bit of a strategy built in, or it's not a strategy all by itself, but it really is most of a strategy, and all you need to add to it is a little bit of confluence from other things. The squeeze is a classic indicator that is widely known, and the concept is you are looking for periods of low volatility in the market when price action has lulled and is flat, and people get really frustrated when there's no price action, probably because they're zooming into the 1 minute chart and they're getting stopped out a lot, when what you should be doing is noticing that a squeeze is happening on a larger time frame, which means price is constricting and pressure is building up. The squeeze itself is calculated using a Bollinger Band and a Keltner channel, which are basically just two moving averages, and they have deviation bands that are calculated slightly differently. The Bollinger Band is calculated using standard deviation, if I get this right, and the Keltner channel is calculated using average true range. Both of those are very, very useful tools to measure volatility. They are very, very good tools. Standard deviation and average true range. Even people who trade naked price charts with no other indicators will even rely on average true range to determine levels of volatility in the market. Anyways, when a Bollinger Band goes inside a Keltner channel, usually with the standard settings, but we have done some custom, slightly subtle tweaks to the settings to fine-tune it and give you optimal signals. But when a standard Bollinger Band goes inside a standard Keltner channel, that is a squeeze. And the claim to fame is that this indicator, this strategy, or this setup was used for multiple over $1 million Tesla trades back in the day when Tesla went to the moon. That's what put this indicator on the map. However, I have completely adapted it to be a totally different type of visual on-chart indicator instead of an underlay, which is most common. And this allows you to see the very nature of the squeeze. And what that means is you get to see visually where, you know, like sometimes the Bollinger Band and Keltner channel are only giving a squeeze underneath price or above price. And you can see sometimes that the squeeze is constricting, but other times the squeeze is expanding. And you don't get that visual if you're using an underlay indicator where it's usually just dots or plus signs or whatever that says, hey, there's a squeeze on this candle. That you lose a lot of data that way. So by being able to see the squeeze happening on chart, you can be more discerning with what you look for and subsequently how you trade it. So that's what we're going to do now. Mickey, I don't know if you have your chart pulled up because my live stream might be delayed on what I'm seeing you do.
I went through a few examples of what I thought were pop squeezes then pop. So
yeah, that's I wonder if I should refresh my Discord and see what happens.
Why don't you just stop watching the stream and then join it again? Just try that first.
I'm gonna bounce. Let's see. Now,
better?
I can see your screen now. Looks like it's live updated.
Yep, we got a bullish pump out of the squeeze.
You're looking at the 5 minute right now in this this little hump shaped squeeze.
Mm-hmm.
Yeah, I was noticing right now on the 15 minute, actually, BTC has been doing a lot of squeezing lately. Jump to the 15 minute chart and let me see what you got.
You can actually see.
Let me know when you're there.
Yeah, I'm here. You can actually see price action just dying and like staying flat when this squeeze are happening.
Well, that's what I wanted to mention was this is not normal. If you scroll back and you see right now how we've had a pretty significant long extended squeeze, and it's been happening a few times recently on BTC and a lot of other coins. This is not normal. When you see price just die and not do anything and it squeezes for like 10 or 20 bars or 30 bars almost in a row, that's not normal. Something's up. And so you can learn a lot from just by looking at the nature of what is squeezing and how it looks. And we could go through the chart and just look at a bunch of different examples. But I want to jump straight to the good example, and that is you're going to avoid stuff where you're only getting like half a squeeze. If the squeeze is only squeezing onto the lower channel or the upper channel, you might be inclined to be like, oh, well, the squeeze is happening below price. That is support. It might look like that, but it isn't really truly behaving that way. It's probably just a coincidence. So as a general rule, ignore squeezes that only happen to the upper or lower channel and not both, okay? Then beyond that, if you see just a teeny tiny faint flimsy glimmer of a squeeze and it's thin and it kind of comes and goes and doesn't stay strong, that you also want to avoid, because that's not necessarily pressure building up. That is just price being dead price action. What you want to look for is when the squeeze is getting thick, and it keeps getting thicker and thicker, which means both the Bollinger Band and the Keltner channels, both your average true range or ATR and your standard deviation, are both constricting, which means you are going to result in a very significant pop afterwards.
I don't know if this is a good example here.
Let me see here. Yeah, this is a good example of, or the reason I wasn't liking this whole move recently was because it just went on so long. And to me, when you see the squeezes kind of far apart and it goes on for quite a while, I like to zoom out. So for example, in this case, when you see a squeeze going on, actually, this is really important. Let me check my notes. If you see a squeeze on the 15-minute and it's going on and on and on, check the 30-minute, because a bigger squeeze might be starting. And as with any trading rule, any indicator, almost any strategy, if the bigger time frame overrides the smaller time frame. If you're trading the 15-minute and the squeeze is going on and on and on, and you check the 30-minute and then you got a squeeze on there, you're done trading the 15-minute. You have to wait until that 30-minute squeeze pops. Or if sometimes you can get a squeeze, like jump to the 4-hour or the 1 hour or something, and you'll see squeezes even on that time frame.
Right here.
And yeah, let's see here. Yeah, I think I need to. My stream is. I'm not seeing what you're doing live. It always lags immediately.
Yeah.
But I can keep talking. Basically, I start on the bigger time frames and look for when all of the moving averages are aligned, favorable, and then you trade when a squeeze pops, you trade in that direction.
I'm going to change the settings a little bit, and so the video quality is going to go to auto, so your stream quality might it's going to adjust for your internet. It's going to automatically try to work with you, so it may not be clear, but it'll at least be more.
I'm gonna check my Discord settings.
And you're hearing the music too, right, on my stream?
Yeah. I usually don't hear the music.
Well,
Maybe it's because I'm watching your.
No, because you're the one that screen that we're watching. So all the live streams that we do, they all have music.
Okay. Yeah.
But you don't see that when you're on your end. That's why it's like the awkward silence that you guys have.
So I'm just checking my notes on the overall concept. And this right now on the 1 hour, this squeeze that you highlighted, is a great example of a trade that you would have probably gotten into. Well, first of all, you can tell that all the moving averages are telling you, hey, you should short, or don't take a long, basically. That's one thing I want to remind everybody is an indicator can have two purposes. It can tell you when to trade, but it can also tell you don't trade in this direction or that direction. So people who trade pure price action, ICT traders or whatever, they may never use moving averages or anything, and they may scoff at people who use moving averages. However, I'm not blindly taking trades just because the moving averages are telling me to. What I'm doing is I'm using all of these moving averages to filter my trading options. You know what I mean?
Mm-hmm.
If all moving averages are stacked short, I'm not looking to take a long. It's that simple. That's common sense. There's some strategies where you can take a long when all the moving averages are pointed straight down. I don't know. I'm not good at knife catching, but my point is, when all of the moving averages are aiming down, you're looking for shorts. When the squeeze happens, you want to see it constrict, and then you take a short in that, if that's the direction, not just based on, oh, hey, the squeeze is happening, but also based on when the squeeze fires, does it fire in the favorable direction, or other things like are other indicators that can give you an entry signal to say, okay, now is a good safe bet when you could possibly get in short. Even at this situation, like as that squeeze is popping, you could have just YOLO'd into a short right there as that 1 hour candle is dropping. But that does not work out every time. You do want some confluence of other indicators or your own strategy in order to safely enter as many trades as you need to always be winning. What this squeeze does is it helps you find moments of low volatility. It helps you visually define what the nature of that price action is, and then it helps you determine, okay, if there is a trade to be taken, it's going to be long or short. And that's basically it. Like, we could look at some other examples. I don't know if you want to pull up any of the coins that have had massive pumps recently, but
yeah, sure.
We can probably see some of the 1 hour or 4 hour or even the daily chart before a massive pump of an altcoin. You're going to probably get some sort of squeeze on a big time frame. And that's the nature of when you're looking on bigger and bigger time frames, you let the biggest time frame take precedence. And when you get to a daily or a weekly squeeze, the move that results is going to be enormous. That's how you catch these giant moonshots. Is you be like, oh, hey, it started squeezing on the 1 hour, and then the squeeze drags on, and you're like, oh man, the 2 hour is squeezing, or the 4 hour is squeezing, and the squeeze drags on. You're like, wow, this thing is squeezing on the daily. Well, when that happens, One, you really shouldn't be trading the smaller time frames because they're just going to be nasty chop. So one, the squeeze helps you stay out of the market, or at least understand the market when it is potentially going to be nasty. Because as you can see, when the squeeze is starting, price gets rejected from bouncing off the edge of this squeeze, right? So if you're not good at scalping on smaller time frames and trading mean reversion, or trading from outside a range back into a range, that's the trade you should be taking on a larger squeeze. Or you just wait and don't trade at all. Wait for the squeeze to pop in a direction and say, okay, this has the momentum released, the energy that was building up, the pressure released in the bullish or bearish direction. Now we can look for a trade in that direction. So I'm not sure what else we should go over. The moving averages are in this indicator. There's 5 moving averages. 2 of them are EMAs. Then there's a third hidden EMA that you can turn on if you're really obsessed with EMAs and you want a third one. These EMAs are the 200 and the 84 EMA. And the reason I have it set to 84 is the way EMAs work. They're almost exactly time frame fractal. So what that means is on a 15-minute time frame, your EMA is the same as, it's going to look visually the same as the 1 hour time frame divided by 4.
And it's 220, by the way. 220 is the EMA, and then 84, and that's a
oh yeah, 220.
1/4 of,
yeah,
I think.
So what I do is I'm mostly trading on the 15-minute time frame. And what that means is the EMAs I see are not just the 220 and the 84 of the 15-minute time frame. What I'm actually looking at on the 15-minute time frame is approximately the 21 EMA and the 55 EMA of the 1 hour chart. So while you're looking at the 15-minute chart, you're actually seeing some very important EMAs, 55 and 21, from the 1 hour chart. That's the trick of how EMAs work, that it's not like down to the last 0.01% identical, but it's good enough that is my overall trend cloud confirmation. Then on top of that, so like I said, there's a third EMA in the settings that's hidden, and you can set that to, the 21 EMA or 55 or whatever you want it to be. But my special favorite EMA moving averages that I've added are a special version of the adaptive moving average that allows you to, an adaptive moving average is algorithmic switching between 2 different EMAs, and you set it to be a really fast EMA like the 9 or the 5 or 4 EMA, which is really tight to price, and then a slower EMA like 45 or 55 or whatever. And then there's a ratio of efficiency such that when price really moves, it's the EMA or the moving average, the AMA hugs price nicely. However, when you get a period of choppy flatness, the moving average flattens out and doesn't do much. This allows you to say, hey, when the AMA is flat, there could be a squeeze about to start, or a squeeze is continuing, and you may not get a trade or a squeeze firing until that AMA starts curving again. Then on top of that, it can also be used as a trailing stop loss. It works quite well for that. and you can play with the settings. It's a really versatile AMA. And then the last moving average, the one that switches between pinkish, reddish, and green, is the Hamming moving average, which is just another algorithmic moving average that has a whole bunch of math going into it. And I just like the way it works. I don't know how else to describe it. It really does a good job of you're not just trading blindly when price crosses any of these EMAs, but when price is on one side or the other of those moving averages, or when they are stacked in your favor, that's when you're looking for a trade in that direction. And there's indicators for when the EMAs and the other two moving averages are crossing, but those aren't that extremely important.
Yeah, I think this is a good squeeze example here. I mean, you can see price squeezing this whole way.
Here, let me pull. Are you looking at TRB on the 15-minute right now?
Correct. So you can see the squeeze even happening with the price action. I threw a few trend lines down. And then sure enough, the squeeze, you get the squeeze crossover.
Yeah, this is a great example of using additional strategies or technical analysis or knowledge and wisdom to create your trade. If you've got a strong trend line, you know that liquidity is building up on the other side of that trend line. And if price breaks that trend line with good momentum, this is classic trading strategy, then you're gonna feel comfortable or safe YOLOing in that direction. Just market smash enter, because that's one thing. That's my favorite thing about the squeeze, is that when the squeeze pops, it often does not come back to give you an entry. Sometimes it does, and you would do well to look for another entry if price returns to the squeeze area. However, the very nature of the squeeze is that it often just goes when it pops. And so you can see in this TRB example, you don't even get a 50% discount, a retrace from that move. It just blasts up to the 200 or 220 EMA and then barely retraces much at all.
I mean, if you're still in a position,
and so
there's your 4-to-1.
What? Yeah, it's gonna go, and it's not gonna, and so you're gonna be taking like a half a risk factor on this pop, because you're gonna want to save half a risk factor for maybe it might retrace back to the squeeze level. And I'll talk about that next in a second. But the basic concept is, if it's gonna work, it's gonna work rather powerfully and quickly. And that's a very useful, powerful thing to have in your tool belt, because a lot of traders are looking for, they're trying to find different ways to measure strength and momentum and direction.
Yeah.
Moving.
I want to sit there with you and Kermix a lot, because he was looking for something specifically like this. He's like, I want to know, I want to just get in and do a trade, 2-hour trade, make my money, call it a day.
Yes, that's the very nature of how this works. See, are you still looking at the 15-minute example on TRB?
correct.
See how price just does not come back. You could move your stop loss to break even like almost immediately after you enter. If you're entering as price is smashing through that squeeze, and after price closes, that one candle that closes above the squeeze, if you market smash enter right there at the open of the next candle, you would start by putting your stop loss below the lower squeeze. That's the safe thing to do. However, it blasts off, and you could put your stop loss to break even relatively quick. And that's one thing I like about the squeeze, is if it's doing what it should, you get to move your stop loss to break even really soon. You get to take TP1 and cover your stop loss very soon. So in this example, you've actually got two options. You could quickly move your stop to break even and let the whole trade ride. I recommend a 1-to-4 risk reward ratio on these trades. If you're entering at the measure your risk from the length of the squeeze. So what I do is I use a fib tool preset, and I measure from the bottom of the orange to the squeeze. Doesn't have to be price, but it can be. Measure from the bottom of the squeeze to the top of the squeeze, and just use your fib tool to project out 4 standard deviations, and that's your profit target for your final TP. In this example, you've got two options. You could let the whole thing ride and just move your stop loss to break even, but you don't know that's going to happen every time. So your other option is see how quickly it moves to a 1-to-1 risk. It gets almost immediately. You got one red candle before it gets to a 1-to-1 risk reward ratio on that trade, basically. So you could close half your position and leave your stop loss below that low, just in case you want to try and get a re-entry. Especially in this case where you're doing a mean reversion on the moving averages. The only moving averages in your favor right now are the fact that the adaptive moving average is hugging up, and the Hamming moving average is green, but it's still kind of flat when you enter. And your EMAs are actually bearish, even though you broke above the 84. But 84 is kind of an breaking above it. It's not that powerful. You kind of want it aiming in your favor, curling up, which it does soon. But you can see how you might want to leave your stop loss below the low where the squeeze is, and and have a second entry waiting at like the golden pocket, or at least the 50%, to reload or add that second half of your risk factor onto the trade to ride it up. Because if you're targeting a 1-to-4 risk reward ratio, you don't need, you're doing as good as if you were putting on a one whole risk factor and targeting a 1-to-2 risk reward ratio. Maybe the math isn't exact on that, but that's why I put half a risk factor in on the smash when the squeeze breaks through, and then I wait for it to create a top and then maybe retrace down. And then you can also reload in moments of, say, for example, you covered this trade with a 1-to-1 risk reward ratio, something like that. And then, as you can see, as it further up, it dips down to touch. It breaks through the blue AMA, and it taps the 220 EMA and the Hamming moving average. It taps them, but it gets bounced back up really, really nicely. And you've got half of a squeeze underneath that. That's a good opportunity to reload and add on another half of a risk factor because you've already covered your trade, and then at that point you've got half a risk factor in profit. You can move your stop loss to break even, and you've added your other half a risk factor back on, so you could put your stop loss below that new low. Anyways, do we have any questions?
I'm doing everything live as you're describing it, so if you're
cool.
laggy, yeah.
Yeah, I'm not keeping up on the lag, but I'm assuming. I mean, that's the whole point. Is this is self-explanatory? If I describe it, like, it's pretty awesome how this gives you opportunities, and also looking over my notes of everything I wanted to say about how to use the squeeze and how to trade it. When you see a massive moon pump move and you're like, oh, I missed out. This question was in the Discord. Who was it that was asking the other day?
I don't know.
What's her name?
Oh, Blonde Squirrel.
She was talking about, or they were talking about missing a pump, and I believe that the squeeze is very good for reloading or getting in when a pump has started. What you do is, in this case, see how the pump started on a low, but those lows are usually going to have the EMAs, or the all moving averages, stacked against you, right? So you might be hesitant to dive in on a risk if you're at all paying attention to the moving averages. If you're just using the par, you might get in. The par indicator is great for entering, sort of. I don't want to call it knife catching because Kermit will yell at me, rightly, as he should, because you're not really knife catching. But when you're trading at extremes, like using the par to get in is great. However, what if you did miss that initial move and you're like, oh man, I missed the boat? Well, in this example, you can see as the moving averages are all stacking in your favor, you get another opportunity. In fact, as the moving averages are fully crossed and in your favor, you get half a squeeze that is in your favor. And I might not take that trade if the squeeze is not doesn't give me both above and below. But seeing that the squeeze fired off a full squeeze down at that low, you could consider this a reload on your trade. Or if you missed the initial entry, you could take a risk on that second or third reload or entry point as the moving averages stack in your favor. And obviously, as you can see, on this last most current squeeze that's only happening underside the squeeze, you could put in a teeny tiny fraction of a risk factor and still come out way ahead by putting your stop loss below that low and just letting it ride. You, like I said, you're targeting a 1-to-4 risk reward ratio, and you're taking profit. Sometimes I take profit at 1-to-1 if the EMAs are stacked against me, or some of the EMAs are not in my favor. I'll take profit at 1-to-1 to cover the trade. But other times, if everything is in my favor, I'll target a 1-to-2 risk reward ratio before I do TP1. And I think that's everything I had. We covered everything on how to visually trade this. I could recap really quick. Basically, we're looking at a visual representation of a lull in price action that is where momentum is building up. And when it pops, you're going to look for a trade in that direction.
Um,
Or, what's that?
just to add to that point, when price action like flatlines, there's tension building. Even if it's for a 1 day, 2 days, over a weekend, over a holiday weekend, tension is building. And you should expect.
Yeah, in fact, if you look at BTC on the 4 hour, almost every Friday night or Saturday, you'll see a 4 hour squeeze on Bitcoin. And you might notice, however, that the nature of that squeeze is a telltale sign of, hey, you know what? This is just dead weekend price action. It's not as the pop of that squeeze may not be as powerful as a constricting squeeze where you can see the pressure building up in a certain way. Sometimes it's just a thin squeeze that just kind of bumbles along and doesn't really constrict. And you're like, oh, okay. This will not necessarily release with crazy pressure, but it is at least a reminder that price is constricted. And maybe especially over the weekend, like on a Saturday on the 4 hour chart or the 1 hour chart, you're like, well, you know what? I can see this squeeze. I'm not going to use it as a strategy, but I'm going to let it be a reminder. Hey, price is likely to bounce in between these two lines for the whole until it really blasts through the lines, which is just not something I should expect to happen every single time the line is touched, because that's how you lose all your money trading on a Saturday night, expecting every single movement to be the big move. You know what I mean?
Yeah.
Man, TRB just went, huh?
Yeah, TRB went nuts.
I wasn't even looking at it recently when I mentioned it earlier that you should check it out. I had no idea that the last 2 or 3 hours had been this moonshot.
Yeah. All right. Well, let's.
I wish I had, yeah.
Yeah, it's fine. You wish you had seen your
So
squeeze.
that's about it. I wish I had been staring at the charts all afternoon, but that's not my motto. The whole point is, oh, that's another thing that I wanted to mention. In the squeeze settings, there are a few hidden Easter eggs that you can play with, and one of them is the silver bullet times for market trading. So now that Bitcoin has an ETF and it's traded pretty heavily by people who trade the stock market during New York Stock Exchange hours, or London, or Tokyo, or Asian session. In the settings, you'll see 3 different shadings, and that'll give you the London session and then the New York AM PM session.
Yeah, definitely.
And that's a nice handy dandy window of, one of my mottos is restrict.
Did I lose you? I did. Are you back? Are you there, buddy?
I can hear you. Can you hear me?
Yeah, I can hear you now.
Yeah, my system ran out of memory.
Ooh.
Apparently 100 megabytes is too much for Discord is complaining about needing 100 megabytes of memory. I think this computer has a lot of RAM. That's ridiculous and silly.
That's yeah. So, All right, well let's call it here.
Anyways,
Um, we gotta make an announcement and do all the stuff. So yeah, if you want to,
yeah, I'll be in the Discord. I'll be in the Discord this weekend. If anybody is gets to play with it and has questions, or if you see anything and you're like, "Ooh, what's this?" Send me a shout out, and I'll try and be around on the Discord
all right,
to help people out.
yeah, for sure.
I have a full tutorial on like a 30-40 minute overview of how to use this that I recorded,
Oh, nice.
and we'll get that into the WAP.
Yeah,
Whoop or WAP or Whoop.
the WAP, or we could make it a Rumble post
Okay.
if it's just a tutorial.
But
All right, everybody, if you want
yeah,
access to this indicator, please go to www.cartoonmoneyprinters.com. Click the Start Now button. From there, you sign up with Whoop.com is our onboarding. Once there, you can get access to our suite of indicators for the 90-day free trial. Let us know what you think if you like it. We're going to be running that for a while, so if you're coming to this video late, after 2024, after the election, we should still be having that going on to try to get people in here. So click the Start Now button. We have a few other indicators. If you watch our live streams, you can see what we have, or if you have any questions, just come check us out. Thanks for watching, and we'll talk to you